Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Could I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Yeah, thanks, Plato. And how we doing in Discord? Are we okay in Discord? Can I get a response on this, please? Well, good morning, everybody. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. I stream live Monday through Friday. One moment here. Can I get a screen check in Discord? Okay, thanks, Marty. Yeah. Thank you, everybody. Sorry for the little delay here. This reads about integrating bookmap order flow tools with auction market theory using a volume profile, and it's based on structured trades. These are available to everyone in the Bookmap Discord Trader Lab community, as well as a library of webinars on the process you're going to be seeing. The Trader Lab is a community of like-minded traders who've come together to leverage their collective experience. It's a team effort, if you will, so that we can all get better. One thing about this, no matter how long you've been doing it, you're always going to try to get better. This is a competitive environment, and the more you understand the market, how it works, why it does what it does, and how you might get in alignment at times with it, the more you understand and the more you differentiate yourself from other retail traders, the more you increase the probability of maybe sustaining a business. Now, the business of trading is a statistically based business. Now, I understand and accept that many of you who are listening to this will not accept that. It's not a predictive business, and there's quite a gap between trying to be right and predict versus understanding gaming theory. Gaming theory is statistics, and the casinos are a business model that we piggyback our trading on, because if you're in a completely uncertain and random environment, same as the casinos are, the only way you can navigate uncertainty is with statistics and probability. Otherwise, you're controlled by your emotional states. By the way, if that's you, it's been all of us. So just saying, something to think about. So I've got an important announcement to make about institutional webinars. They're available exclusively to Bookmap Discord participants, and a contest where you can trade $1 million SIM account and win Bookmap Global Plus, $1,000 cash, and the MBO bundle for a year, plus other joy. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. By the way, grab a pen and a piece of paper, take notes, make the time you use when you visit here productive. This is how you grow, and this is also how you may get a better understanding of how the market works. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And please remember, this is not a trade calling room, though if we get there, we can talk. I think you've heard that before. Okay. Now, a couple little announcements, and let's, as they say, get to it. First of all, this is in Discord only, and this is the date. Today is October 23rd, 2024. So effective today, 10 a.m. This is Eastern Standard Time. Thursday, Scott Pulcini. He was a prop trader. You probably have heard of him. And Friday is Al V. Al V is a quant and hedge fund manager. I know him very well. And you definitely want to be hearing these. Now, the thing, because if you want to understand how large institutional traders operate, it's important to get a more rounded understanding of their behavior and how they operate without disturbing the market and bidding prices up when they're moving size. This is the point. So as retail traders, the more insight we can develop that other traders will never get, the more edge or at least understanding we'll have. And this is exclusively in the Bookmap Discord community. There's a link in the bottom of YouTube if you're visiting, and you, if you like, can attend. Also, I'm going to suggest if you're in the Bookmap Discord Trader Lab community, if you cannot watch these, record them. If you have OBS software, record them and watch later. That's all I can say. It's up to you. Of course, these will not be up on YouTube. So you do need to be in the Discord, Bookmap Discord community. And now this is the competition, trade 1 million in SIM. There's no cost, not a Zippo, no payment is necessary. And, but what you do need to do is install and activate Bookmap for desktop. There's no cost for that. It is actually Bookmap. You can get your hands on it. And then you trade $1 million account in SIM. And the prize is, as I mentioned, Bookmap High Tier Global Plus, all the bells and whistles, MBO data package, and $1,000 cash. I think that covers it. I hope you like that, and I hope you'll visit the Bookmap Discord Trader Lab also. And there's a link in the bottom of YouTube, and there's no cost also for Trader Lab. So let's go take a look. Now, I'm going to show you, this is pre-planning. This is what's called a trade plan. Now, what is a trade plan? What are the possibilities? We discussed this in Trader Lab way before the market opens. Now, I'm going to show you levels. Now, this is a volume profile, and I want you to get a sense of how it might be used. Yesterday, we talked about two scenarios. One of them was to take out 60 and come down to 48.25 and possibly to 32. Also, remember, the stops are under the longs are in the market. The stops were under here. Now, this was yesterday's low, so we're looking for this. And if we could get through 60, which we've been banging our heads on, then take the sell stops out under here. And this sets up 48.25 as our target coming down. And the current low of the day is around 45 and change. By the way, horseshoes and hand grenades. If we can get decisively under this level, it puts 32. Now, this is not a recommendation, of course. Now, let's come back, and this is important. Write these numbers down. I'm going to show you how this fits together. Write down 58.60, write down 48.25, write down 86.5, which is a micro composite. In other words, this whole volume for this whole area. This is a consolidation. This is the highest volume. Yesterday's highest volume is around 90-ish. And the previous day's volume was 5,900. So you understand yesterday, when we failed to get below 60, it turned around the market to come back to 86 and to come back to 5,900, which became the targets. And if we went higher, 5,908. So let's talk about today. So, and we closed up here yesterday, our settlement. So my plan coming in today was, depending who takes control, up to maybe this to 5,900-ish. If we clear yesterday's high, then to 5,908. And by the way, the selling in this leg, where did it start? Up here. Down. And then back up. So you see, this is kind of how the auction works. And this is, call this a higher time frame, intermediate time frame. So I know the following. Now I'm going to take you to Bookmap and show you where these levels are. Maybe. Let's try this. Okay. So now let's look at levels. Now this is the ETH. Now let me give you some statistics and some structure. Very important. We are opening lower inside of yesterday's range. Just so you know what all this is. Opening here. Settlement was up here. ETH high. And this was 58.90-ish, the retail price. Now, what's important and significant about this? The ETH high tested this level. That might be, underlined, too high. Remember that. So there's over a 93% probability, and past performance is not indicative of future results. You got to vet every statistic you're going to hear from anybody. There's over a 93% probability we take out either the ETH high or low. Well, if this was yesterday's retail price, and retail means this is what they were willing to pay high volume at the RTH close yesterday, saying this and the settlement is here, what happens if we test it in the ETH and we reject it? Might that suggest too high? I'm saying maybe because we don't know. So let's go a little further. Now we have the microcomposite volume point of control, the highest volume in the intermediate time frame. We are going to open below it. So if we're below this and below this, maybe they're too high. Let's look a little further. The ETH volume point of control, it's the same as that in a different time frame, and the same as this, which is a higher time frame, and this is the highest volume of retail price in the ETH. What I'm seeing is all these might be too high. Then I have the overnight mid, not so much, also a high probability, and then this. Now this is important. Here's what this is. This is called a distribution, and the market rotates in these things, and the high volume, which you see is there, is like a retail price. Oh, that's too high. I'm not paying it. Remember? And then come down here. Oh, it's on sale. And then the market consolidates or rotates. This now becomes the high volume for the whole ETH. Think fractals, Russian dolls. Now the next area is here. If this is too high and I fall out and start a new distribution, this is now saying this, let me mark it. I didn't get time to mark this. It's marked on my regular trading chart, and it's called an LVN, low volume node, and that's exactly what it is. It's low volume. What creates low volume? Think of it like a separator between distributions or consolidations. So this is the separator. So this is where the buyers were. This is where the sellers were. This is where they thought was a great price. But if this price becomes too high, same as that price is too high, then I can leave it and start a new distribution. And if I start a new distribution, then my micro high volume structure or high volume node is here. But then when I fall out, it creates the same process. And where is my low volume node now? It's here. So how do I see this, or anybody else for that matter, who understands how the market works and using a volume profile? Too high, too high, too high. Retail, too high. Retail, too high. Retail, retail. Watch. RTH open, and remember, ETH low. What was the statistic? You wrote this down. 93% probability. This is all before the market opens. Then what? 60. This is the biggie. This is what's been our support, and we've been banging on it. So my inclination, and I post this all in Trader Lab, and so do others, and there's other traders looking for longs, I'm looking for shorts, and there's no right or wrong. It's your plan, your statistical probabilities, and your time frame. So this is just a way to align. Some traders will put a trade on near the high, wherever it is, and ride it all the way down to this target, which is my primary target for today. And other traders are going to be getting long and getting, trading shorter time frames. So this is not right, like this is the way to trade. You can trade any way you want. So here's what I know. I'm opening lower. I got a 93% probability of taking this out, and I have a probability of, so if I get below 60, that sets up my next target, which is this. And I trade the targets and manage my, whatever. So are you guys with me so far? Give me a thumb up if you're getting something out of this. Now I'm going to go into the RTH open. All this is preliminary work. If you don't have a trade plan, in my opinion, you're a gambler. Just an opinion. Whoops. How are we doing in YouTube? Is anybody there? Please give a thumb up and visit the Bookmap Discord Trader Lab community. There's a link in the bottom of YouTube if you want to find out what this is. In my opinion, this is what the business of trading is. This is how you potentially can create a career in this business. And of course, past performance is not necessarily indicative of future results, but if you come to Trader Lab, I think you'll find it very interesting. And also you can ask the traders in Trader Lab how this is impacted. Now remember, in the ETH, this is our outside edge. So I am looking for shorts. So what I do is, now I'm going to go into an advanced concept, and I did a webinar specifically on this, and you can find it. It's called VPOC migration. This is opening trade. It's very aggressive, and it's not for the faint of heart. This is for experienced traders. The issue with this is when you have no structure, you're trying to read microstructure, and it's very fast. So what I always suggest to developing traders is you need to start navigating and learning to read this. You do not trade it because there's loads of structured trades, and these are all available at no cost, 60 PDFs of these things, and you would know where your trades are. So this is a trade, but it's not a trade that developing traders should take. What they should do is call it traded in sim or just write it on a piece of paper and train your mind, because this takes unconscious competence. But here's what I know. I have my levels laid out. This is what the volume profile is about. It's a language of the market. I don't use any indicators. I use order flow, structure, and the volume profile. It's my chassis. And I know my probabilities and statistics. So, okay, here we go. So RTH open. This yellow line is called a developing volume point of control. It's the same thing I was showing you before, where the high volume is, there's low volume, there's low volume. So what happens here? My high volume is here. You can see it right there. And now the market lifts. So the possibilities are, of course, market opens lower. We can get buying because the market was long yesterday, and we get buyers in here who go, oh, this is great. I can buy it on sale. Who knows? They might be right. I mean, we're above yesterday's low, but what we know in the Trader Lab is there are stops under yesterday's low and loads of stops sitting under here and our targets, right? And we know in the ETA, to say, I'm trying to give you a sense of what we know. Now, we don't know what'll happen. That is not on the table. We know what has happened, and if we understand market mechanics and we know where something happened over here, we can have it in our plan to evaluate when we get there. Okay? So market's going up. So for me, I'm looking for shorts. Now, also when the market's going up, what goes through my head? Maybe you should have got long. What do you think? And I call that hide. Hide is the lunatic who is whispering in your ear. Oh, you should have bought that. Maybe I ought to get it now. I'm going to buy it. It's now it's going up. They're going to squeeze everybody out. Isn't that what goes through your head? How about this? It goes through my head. But what I've learned in almost 45 years of trading is that's just, as they say, trash talk, because it's trash. It has nothing to do with market mechanics. It has to do with my FOMO. So that voice is the voice of regret. And if I don't recognize it, I will impulse and lose control. My plan will evaporate, and I'm thinking dollars. Does that happen to you? Happens to everybody. Are you going to do something about it? Maybe. So let's look what's happening here. Buyers, I got sellers here, a seller there. Now, right here is resistance. I'm going to show it to you, and I'm going to take you down into microstructure. This is advanced concepts, but to make it simple, and I want everything simple. This is not complicated. It's just random. Write that down. Trading is not complicated. It is random. Rotations are random. That's what gives us so much trouble with it. Because, I mean, this thing could go down, go up, right? It can do anything. So that's why I said this is not a predictive business. This is a business of alignment. So right here, sellers, how do I know that? Because I got my buyer here. What happened here? Buyers were here. You see the sellers. Why didn't it go down? You see a red bubble. That's delta. That's aggressors. Market comes up. What happens here? I got my sellers here. What's going to happen here? I don't know. As it comes down here, there's a break under here, so I have to wait. My buyers are here. My sellers are there. This is what a consolidation is. Chop, chop. There's the high volume. This is the shopping experience I was showing you at the top of the stream, except we're in fractals. Think Russian dolls. This is the little doll. Well, if I take these sellers out, and this seller here gets tossed under the bus, and this seller here gets tossed under the bus, I'm going higher. So I know the buyers are here, the buyers are here, the buyers are here. Why? Because the sellers didn't make progress. They're being absorbed. So I know I have buyers. Now remember, I got this too. So I'm looking here. This is my level, and this is a level for me to look at. So let's watch. So buyers are here, going to the moon, right? What do I got here? Nothing. What does that say to me? Me, in order flow, there's a passive seller here. And how do I know? Now, it doesn't mean that this is the top of anything. There's no way to know that. My buyers are here. My buyers are here. My buyers are here. My buyers are here. What's going on there? I don't know. Sellers are here. Change. Now, this is resistance. Let's watch. Why is it resistance? Passive side is there. Buyers are trapped. Buyers are here. So I got support here. I got resistance there. Notice the structure. Consolidation. Now, let's look. Buyers come up. This is my location, remember, and I'm stalking the trade now. Remember, buyers are here. Sellers are here. Sellers are there. Buyers are above this guy. If I clear this, I'm going higher. If I don't clear this and I break, I'm going lower. Hasn't done it. Sellers are here. So sellers are here. Sellers are here. Stop detector. This is called stop divergence. It's the only thing I use from my indicator days. I built trading systems. I understand indicators. Built my own indicators. Very deep, whole different animal when I was managing dollars. Different animal across different asset classes. No day trading, swing trading positions, all that kind of stuff. So my sellers are here. There's my seller. This guy's under the bus. Support is here. Here's my structure. Let's watch. Sellers are there, right? Does this look like that? Yes, it does. I go higher. My sellers are here. He's under the bus. My sellers are here. My buyer is here. My sellers are here. Where else am I? Notice this. Where did it come from? It came from the ETH. Why? It was too high. We rejected it. Now I have my high volume structure. And I've broken under here where my buyers were. This seller was absorbed. My buyers are here. So this is support. Okay? My high volume. Now let's watch process. And this is really to help you see structure. Okay? I just do this by looking at it, but don't forget, I've got some more time on you. 45 years. Not doing this, doing everything but the kitchen sink. Why? I'm just like you. Break, test. This is resistance. So I break under here. My volume is there. So this now is an area to lean against. The stop goes here. So let's watch the trade. Where do I break? So I break under here. My target is the overnight low. This is my first short. Break here. Come back here. This is a short also in TraderLab. Let me show you two. This is called the variable high volume node. I'm going to go into multiple time frames here, so try to stay with me. So what is going on here? Of course, I ask myself the same question, by the way. What is going on? Aren't you always asking yourself what's going on? Well, if I have structured trades, this is a structured trade. If you vetted it, then this is a short. If it's not a structured trade for you, what does this say? Now I'm in fractals. In this consolidation, this is too high. I break away from it. I'm not paying that. In the outside edge of the ETH consolidation, I'm not paying that. The shoppers left the store. See how I'm putting pieces together? Over here, this is where the high volume is. Retail. I shift up here. This is now the high volume in retail. What do? I rip right past it. What does that say? I'm not paying that. What does that say in the developing daily time frame? Now I'm going up in time frame, and I'm in multiple time frames. Try not to be confused. This, if the retail price is here, then this might be too high. What happened? Let's look at consistency. What happened up here? This might be too high. This is yesterday's highest volume. in the daily developing time frame, this all changes. So this is moving around. This is the same behavior in a fractal or lower time frame. So this is resistance now. So what can you do with this? Short here, target is here, 93% probability. By the way, there's over an 80% probability we take out either yesterday's high or low. What do you think it might be? This is a short in the Trader Lab. And let's watch it. So this is a short. Stop would be up above here. I did that one also. Huh. Let's just watch. See? Watch. This is an ad. Stop is here. Why? What did the shopper say? Auction. What is the auction? Shopping experience. I'm not paying that. Get out of here. Test. Short again. Test. Shorts. Test. Shorts. I was adding. Doesn't matter, right? See? So now I've got this, and now there's a couple possibilities here. Right here is what's called the opening swing high. And this is the outside edge of that distribution from the ETH. I know, just like you do, anything can happen. And if you think you know what's going to happen, you're doing yourself a disservice, because you need to have an open mind and a narration. So I'm going to label this just opening swing high, just so we don't forget. Now let's watch. So I got my location and my opening swing high, and this is vulnerable if we come out the other side. So shorts, 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 all this is Trader Lab. And remember, this was our scale. So what I do is, and this is just my plan, if this is too high, variable high volume node, I'm selling against it, and this is where the trade would fail. So to me, I'm just short, adding, scaling, adding, scaling. Now, I'm not recommending this because, you know, who knows? Yesterday's low is a target, next target, and then I'm looking for it to come out here. Now, it was interesting what happened here, because we noted this, but we don't know what's going to happen. So let's remember that. Let me try to get back to this. At 9:30 Central Time, so you know, we have a what's called the IB stat. And remember, you got to vet everything for yourself. There's over a 97% probability in this configuration we'll take out either the first hour's high or low. About a 29% probability we'll take out both. So this right here is microstructure. You could see it here. And it's in alignment with 60, which is a very important level. Remember? Let me bring you back so you see multiple time frames very quick. The 60 right there. That's a key level, support. And we've been banging, coming down to it. So the thing is, to me, it's a weak structure, but it doesn't mean that we won't get buyers here, because it's the support area and then rotation. So I just bringing you back so you know where the levels come from. By the way, if you have questions, post them in YouTube and Trader Lab. I'll come up for oxygen soon. So we see buyers here. This is the absorption detector. So, and you know, we watching the order flow, there's icebergs buying, 464 sell stops coming out. Thanks for playing. Love you. And broker sends you a gift basket. So right here, now I'm taking you down in a fractal. Now for me, I just observe this, but I know this is important. So this now has over, almost a 98% probability of getting taken out. So I'm still looking on the short side, especially since I got under yesterday's low, and then that puts my targets, this on the table. That's my next target if I clear this. And we have other structured trades in Trader Lab. So now let's watch. So here I come down, and 9:30 is where this gets set. This is the absorption. So I'm still short. I'm now below this, and I'm feeling really good. But, and here's the butt of trading. Absorption. Sell stops, buying icebergs. And I can't show you Trader Map Pro, but there's liquidity here too without, I don't want to lose my place here. And remember, 60s is almost like a pivot, because it's that key area. So I have a 90% probability of taking this out after 9:30. But look what happens here. I get my buyers. Now I get my buyers, and of course I'm muttering certain terminology here. This is my low volume node here. Now I'm going to label it. And this is resistance. So let's put LVN on this thing. So that was for my trailing stops, okay, for my runners. Now I'm already doing nice. And this is the same thing as what I showed you up above. That was too high. Well, if I'm doing this in here, which is what this is over here, and this is too high, I anticipate it'll go lower, right? Now I do the same behavior down here. Let's just look. The LVN is here. So I have LVN here and here. So, two possibilities. Let's consider them. This is too low. This is my consolidation. And up here, over here, is a low volume node. Right in here. I'm going to label this one. So what I have is what's called multiple distributions or consolidations. They're called distributions in the profile world, but it's the same thing. It just represents the rotation inside of a structure. So like this kind of thing. So I know when I come above here, it's a warning Will Robinson moment. You remember Will Robinson, Lost in Space? And then I have this outside edge here. And I got my VWAP and my mid. And right here, and I pointed this out in Trader Lab, you notice, here, let me just take you back a little bit. The LVN is here, outside edge. And I know there's stops at mid and VWAP. So what I'm thinking to myself is I got to keep my stop out here. So if I do come to mid and VWAP and pick off the stops, do I get sellers here? Then I continue down. So that's the plan. And there's stops right above here, this swing. So, and my LVN is here. Now let's look at the behavior when we come here. Because this was the over-under. What is an over-under? It's sort of, think of it like a pivot. Here's our VWAP, here's our mid. And I see we're still getting our continuation shorts working here. When I stream, I do not initiate trades. So right here is resistance. Notice what we have. Buyers. Now there's a buyer here, but we break below. This becomes resistance. There was a passive seller here. There's the icebergs. Now I break low and I get my sellers again right here. Now look where it is. And this is resistance. Here I break low. Right here I'm going, you're okay. Watch. Right here, I take it out. I get these sellers are still active here. So right here, my teeth are chattering. Break low. Break high. This trade is over. And now I turn around and get long. Now, and my goal is to squeeze out these guys. So to take this out. So now I'm looking for potential extension out the top, and it's now 9:30, and I have, remember, that high probability of taking out the first hour high or low, almost 98%. I want you to think about I should say the thinking. So now it's long here, actually. And basically what happened was broke here, which violated all of this. So I got this is too low, this is too low. There's my outside edge, broke through it. Now 98% probability, you see. So I'm looking for the top and more. And my targets, this, and this. These are my primary targets, and maybe further, but so now I'm in the longs, off the shorts, because I think maybe it's done. Why? Because I tested the 60, took the stops out, and came back inside. I'm giving you the rationale. This is my trade plan. And some days, you go, yeah. And other days, I'm just following a plan. I don't know. So I get long. I get risk neutral, part of my plan. Why? This was resistance, remember? Support becomes resistance, you know, and this is resistance, variable high volume node. Where did it come from? Here. This was too high. So I got to scale. So long scale in case we just bop this thing and fail. And then it was out the top and other targets. Now, joy, oh joy, oh joy. Let's look. So this is the IB high. This is my next target, and then out the top. Just and because there's stops sitting above the opening swing high. Right, guys? Right. So let's look at resistance. And it comes in many flavors, in multiple time frames and fractals. Where is my resistance, you're asking me? It's here, where the short got set up. Where do I come back? Let's just look. See if you don't see something interesting. So, yeah, I get long. That's neither here nor there. This is where the selling started. It is resistance. Now, my anticipation is we're going to take it out. All right? But I know I don't know anything. So I'm in the clueless zone. So that's my long. And now I want you to see what happens. Look where we come. Right here. Did I know that was going to happen? Nope. Not my job. I can't. I'm in a random environment. So now I got a scale and I'm sitting here and I'm starting to go, oh, this is going to be a nice long. Got him now. Resistance. Resistance here. Okay. So primary was this for getting scaled from a long over here to there and then out the top. And now let's look. So I come to my location and at this point, I'm, don't know anything, clueless naturally. And I see this stop sweep, and up here, I'm seeing selling too. So I'm seeing the icebergs and I'm seeing absorption. So if you're looking at an order flow tool, you got to kind of think about what's going on here. So I got buyers here. They're being absorbed. I get a buyer here. Absorption. I don't know. Sellers are in now, take control here. Now, when I see this selling, I'm going, well, that's interesting because I didn't, quote, anticipate that. You notice I don't use the word expect. If you expect something, it's a wrong way, even a wrong vocabulary, in my opinion. You got to be very careful of the words and the self-talk. So I've changed my self-talk to I anticipate because that's all you got in this business. You anticipate. You certainly can't expect and you can't predict. So right here, I see the sellers. So this is aggressive selling. So, and this is where the passive side interacted. So the buyers take a shot here. I see seller here. That's absorption. And up here is where my passive side interacted. Again, no way to know. Until this. When I see that, it's like the jaw falls on the desk and it's, we better, right here is really where we got to hold. Okay? Because the buyers were here. The buyers are there. So right here is support for me. And this is in trouble here already. But, you kind of go, come on, right? And the outside edge of this distribution is out here. So subject to your plan, you could have your stops out here, or you could be out here or anywhere. It's all subject to your plan. So for me, I got taken out and now I'm not in, and it surprised the heck out of me. I'm going, you so-and-so, right? So-and-so. So now my LVN is here. Remember, 68. It was a pivot for the long, and now it is the outside edge of this distribution. What do I do here, you ask? I remember where I got short. I'm going to have to look. Oh, here. This is the outside edge of this. When I broke below it, remember how this was resistance coming up? So it was, like once we came up, I should say, became support, which was the reason for the long to come out the top. When I break back below it, I'm back on the shorts. Let's see if I can show you. I'm going to have to look at where I entered this thing on my book map. Hold on. You know, sometimes I look at this and I go, where did you get it? There. God, I can't find it. Oh, not wait, I'm in the wrong place. Hold on. Oh, okay. 60. Wow. No, I did that. 65. So let's look at the structure. I'm taking now down in a fractal so you can see how I got short in this thing. Uh, it was 955 ish here. So right here, so this is my support. I break below it. Now I'm looking to get in. I got the mid here, which doesn't excite me, but I'm below it, and there's my pullback to mid. Now here's my high volume structure. It's right here, 65. You know, right there. You can see it. So this is a micro structure. So basically, if this is now too high and I start, and this is all I got at the moment. Okay, I'm under this, and I have my high volume developing here. Think of this like this is the same behavior, but in a micro structure. Think Russian doll. So sellers are here, buyers are here, the volume is there. If I break below it, I can sell it with a stop either here or a little further away above this for now the continuation. There's the 65. That's my entry. Or here, you know, it's subject to. So this is my short. My stop is initially above this in case we come up and pick this, and stop pick, I mean, and it's the LVN, and then south of the border. Let's watch. Notice where the support is. And we had that stat, remember, at 9:30, over 97% probability to take this out. And we have another structured trade in TraderLab called the IB continuation trade. I'm going to show it to you. Now, what I did, not that it matters, and I take stops. Don't think there's no love potion number 9, no holy grail. What are stops? Overhead and cost of production. Do the casinos pay the gamblers? Yes. So let's come back. 9:30, we have the probability of taking out either the first hour's high or low, and given that we failed the high, and the sell, and everybody in this long, all the longs who got long off of here are now going to get thrown potentially under the bus. So I have another trade here called the IB continuation trade. Why would I take another short? Because, let me just see if I can show you why. Stops are here, and this is the outside edge of this consolidation. When I'm in a higher time frame, this is my low volume node. Notice how this is fractal. That's that low volume node, but my stops are sitting under those lows. That's fuel. So my trade plan looks at this in the sense of where behavior may happen. And that's my target. Okay. So this is the IB continuation trade. Here it is. So again, over 90%, 97% probability. I break here. Now, because I have a target here and the stops and the fuel, when I come back here, this is a structured short. This was an add for me, a scale, because I always scale, and then this. Then, if I have additional runners, I manage them. In other words, I don't know where we're going because I have another target down here, and I was shooting for this. So I call it the, what is that, the Hail Mary pass, you know, where you throw it in the end zone and hope for the best, 32. So this is my primary target. Then it's trade management. Now let's look. Notice what happens at my primary target, which you already know about. I see absorption detector, 665 buy icebergs, 1,000 sell stops. Thanks for playing. Remember, look forward to getting a gift basket from your broker. And I've got the sellers here. That's the stops. Remember what delta is: initiators and market. In other words, aggressors. And stops become an aggressor. They're a market order. So delta measures them. This is the absorption. So I'm seeing the absorption, and the antenna, of course, goes up here. So I'm sitting in this and I see this. So I'm going, well, it is my location. And now I've got to manage this trade. How would I manage this trade? Now, this is individual. This is not, there's no right way, wrong way. There's nothing. This is trading. So I have to use process. Let's talk the process. This was the last short. We came down and now we stop here. Let me isolate this. So here, remember, short here, I should say there, IB continuation, scale. Now what? Chop, chop, chop. What is this? Consolidation. Let me draw my little high volume line. Same as that, same as that. This is an auction. I'm not paying that. Yeah, but it's on sale. Think Russian doll, retail. If this is too expensive, I will reject it and go down. And this becomes resistance, just like that was resistance. Follow the yellow brick road. Now, resistance. So now let's keep going. Watch. What do I have here? Too high. And what is this? Consolidation, right? There it is. I break away, micro low volume node. What happens? Down I go. Then what? Another consolidation. What is this? High volume node. Let's watch it. And where am I? My primary target. Let's keep an eye. Now, where is resistance? It's there. Where is support? It's there. And where? So I have resistance, support. And now, do we notice a potential change in behavior? Let's see. As long as I'm under here, my runner is okay. I'm conscious that I might be coming back above this, which can create trouble in River City. So let's see what happens. Micro high volume is here. Now I'm getting really down with an electron microscope. You can ignore this. I keep an eye on it because I'm continually narrating. But this is resistance. Notice, boom, I'm out right here. And then it goes lower, and I'm going, well, you should have kept it a little further away. Now watch. Absorption is here. We make a new low. Now this is my trade management. I'm out, I'm out. Because I got my primary target. High volume is here. So now we had support here, break below it, resistance. Support here, break above it. If I had not got taken out here, I'd be looking still now here. That's all. So I just got out on this rotation. Life in the fast lane, I don't think much about it. Now what? I think we're getting close. Oh, no, this is even current. All right. So now let's come back and look at structure. We have the IB, we have this, and we have a low volume node here. Now, I don't know what happened yet here, so I got to go take a look. We're doing a fractal. In other words, I'm trading in multiple time frames. And I'm going to be, if you have a question, post them. I'm going to be coming up to take a look. Low volume node, outside edge. Now, if I was here, I should say by here, I am here. But if I was trading, these are trades I would take. These are continuation shorts. So, but this is a little more advanced, because now I'm using this to look at where the volume dried up. And remember how the shopping experience works. Too high, too low. Out here, this was the outside edge. We came above it. If I come across this one, it sets up the next one up, which is there. So let's see, and here. So let's watch. So, and order flow. There's other components in here. So I'm using order flow. So right here, I see a seller here. This is resistance. Remember, it was too high. And I come to towards my outside edge or to it. There's no precision in trading. buy stops are above this swing, and my next resistance is up here at the IB. So this is an area for me to potentially get involved. And I will be looking at questions, so take a look. Let's look at our micro structure. I've got my sellers here. I've got my buyers here. I have my micro high volume right here. This is resistance. Now, I don't know because that's resistance too, right? Actually, it's right. See the 585? Here, let me get back here. I want to make sure this is accurate. 651 currently is the low. Actually, it's 594. So it's actually a little bit higher at the time. Well, close enough. So this, you see where the low volume is? So there's higher volume here, and there's higher volume here. This becomes your outside edge. 571, it's actually 571. So it is here. But I'm going to leave this here. I don't want to mess with it, okay? But it's actually, let me do it right. I mean, if I'm not going to do it right, what's the point, right? So that, what it tells me is not necessarily where the market will go. It's telling me the volume dried up over here. So that's an outside edge of this. So in fractals, this is an outside edge of this little thing. This is an outside edge of this one. This is an outside edge of this, and so forth, you know. So, and I know we failed at the IB high. And that, if that tells you a story also. So this now is resistance, and it's only an area. Remember, when I first learned market profile in the mid 1980s, early 1980s, from Peter Stottlemeyer, he actually created something called market profile, and he actually taught this to me. And we didn't have volume profile back then. It was only time. So we didn't have volume. We didn't have domes. We didn't had nada. No internet, Zippo, you know. So, you know, it was an abacus for your math and a chisel and a stone tablet. Outside edge. So what I learned early on was that this was resistance. But the thing about resistance is there's also stops out here. So we can bump through this, and then and why are there stops here? This is a swing. So what's it? Swings, stops. Retail traders, think like a retail trader, don't act like one. So there's buy stops here and buy stops there. So if I come up here, I want it to take this out. Write it down, look left. Come up here, location, stops are here, micro high volume structure, absorption, sellers are here. Support is here because of this. Break high, test. I'm going to put a little mark here just so you can see support. And I know there's a lot of lines going on here. I take them off, but I don't want to take the time to mess with it. Notice what we do. Selling icebergs come in here. Micro high volume structure now is here. I get my sellers. I'm on alert for this. I would be. I'm not because I can't trade it now. And when I see this, that's my trigger. Watch. Remember where my LVN is. This is my trigger, and my stop would be up in here. Get my seller. This is my resistance. And remember what I said. Where's the stops? The fuel is here. So you got to be aware. You got to look left. This sets up a short. And it's going for my next 32, which not that it's mine, but it's the market's here. So this is my next target on this trade. We're current. Questions, guys? Thanks for your patience. This is Trader Lab. This is trading the auction. I don't use any indicators. This is a language. So what you do with indicators, and there's no problem with indicators, it's just that, do you think instead of letting an indicator, which is looking in hindsight and just measuring price with no awareness of context, could you use an indicator more productively if you understood market mechanics, how it works, why it does what it does, and having a vetted trade plan that gives you a statistical edge, you know, like a casino. They play games, the outcomes are random, they're on completely uncertain environment, they don't control the cards coming out of the deck or gamblers play. They only play games that have an edge. the Trader Lab is all built on the same process and the same proven business concept. Questions, guys? I now can come up for oxygen. Thanks so much for your patience. Hunab, I keep it simple. I don't use, gamma or any of that. I don't do it because I want to eliminate as much conflict. I have used them in the past. I've researched them. Other traders relate to it. I just found it as a superfluous input. And I'm not saying you can't develop an edge with it, but that's the whole point. Edge is probability. And the more you add, and then again, I'm only talking about me. The more, let me do it this way. The more I add creates conflict. The more ambiguity I create for myself, the less I'm able to actually operate. In other words, it'll create as soon as I have conflict, because everything is random. But if I want to be sure I have a statistical edge and I'm going to use anything, it can't just be a random piece that disrupts my edge that I already have. In other words, it has to increase my edge. Very often, things that are random, and I'm only talking about me, Fibonacci, Elliott wave, I've done all this, Gann, all this stuff, measured moves, all of it's random. Extensions, retracements, all this stuff, I'm using fibs now I'm talking about, are not material to me. So all the things I used in the past, I've thrown out. And I have used gamma, and it might be appropriate, in stocks or other things, but for this, I don't use it because anchored inputs are what I use. It's in my primer webinar, by the way. Everybody, in case you don't know, you can all visit the Bookmap Discord Trader Lab community. There's a link in the bottom of YouTube. There's no cost. And you can download 60 PDFs of these structured trades. And there's a library of webinars, some of them up to 5 hours long of real-time narration. We're talking trend days, rotational days, and the transitions. Because I think the transitions are very important. But just to answer your question, I'm a minimalist. Because if I have a gamma level sitting who knows where, am I using the gamma or am I using the auction? So I have prioritized my inputs and I don't use that one. Remember, this is my target. And this is a target, right? This is my next target. And this is where my runners were. So when I get taken out on a trade, if I don't violate structure other than, rotation out here, then I'm putting the trade back on. And if I get on, and this is my scale, and then this, not a recommendation. So I just trade a process and I accept I can't predict anything. So I'm a minimalist. And I've learned to speak a foreign language. If you guys ever try to learn to play a musical instrument or speak a foreign language, that's what this is. And what you're doing with indicators is basically you're using a translator. But you do know if you've got multiple translators because you're in multiple time frames, you're going to just hear a lot of noise, I think. So I have no indicators. I don't need them. This is right where I need to be. And this is a chassis. So I think of this like a chassis that I overlay structure. And then I have structured trades and triggers from the Trader Lab that are available to all of you in 60 PDFs of these structured trades. That's why the fact I get taken out on a rotation, I just put the trade back on again. And if I wasn't streaming, we'd be sitting here. That's a nice trade, I think. And all this is remember, all of this is on the map before the RTH open. 32. See the levels? See the 48? See the 60s? All this is already done. And this is what a trade plan is. If you don't have a trade plan, then you're just kind of making it up. And you're subject to, your emotional stimulus. We're all still subject to it. But if you understand market mechanics, then you know what might happen. And if you remember yesterday, this was the same plan for yesterday if we got the shorts. What we got was the first move down. We didn't get through the 60. Remember yesterday's low, and then we turned around. That just turned it around to the long side and then put long side targets on. And this is the opposite today, you know? So that's trading. Questions? Well, Ben, that's super. Then you use it. I don't use it. Remember, you got to vet everything. If whatever you create an edge with is what you should use. The only way you know if you have an edge is statistics. Random behavior happens with everything. You don't need an indicator or even a screen to have winning trades. You have to be sure, and that means you've got to have statistics to actually let you know if it creates an edge or if it actually costs you. It's the only way you'll know. Other than that, that's your business. You know what I'm saying? Is my business is, no, I don't need that to trade, and I don't want it because it's superfluous for me. Because I find the more we put on, we have to ask ourselves, why are we doing it? If it gives an edge, that's why you should do it. If it's random, then no, for me. I only talk about me. You know, it's all about edge. If that gives you an edge, and I don't mean random outcomes, statistical edge, then by all means, this is the next target. And you notice the absorption here. So this is my next target. And right here, I manage the trade because I see my buyers here, micro high volume, micro high volume. Here, micro high volume. I don't have to go here. I could care less about it. I care about now managing my trade because I'm seeing these sellers, heavy sellers, and I see absorption. So for me, and this is not a recommendation, right in here, I could punch out of the trade and I could care less about it because this is my target. Now, target is not rigid, and if we come under here, there's more. So this trade would be over for me. And I'm not calling trades because I'm as clueless as everybody else. I have more targets down below. Actually, this is a target, but maybe not for today. So, it's done. I hope you're getting some out of this. Questions? When I say done, I'm just talking about me. I'm not calling trades because I'm as clueless as everybody. So 32 target in my world has been achieved, and I am flat in my world. If the IB low was before the LVN, I'm not sure what you're asking. When you mean before, I'm not sure what you're referring to. You mean up here? This one? Well, there's a couple of them, you know. So when we came through here, then I just have to come up, you know, to the next area and just look. And then I'm looking for triggers. So they're not mechanical for me. I have to get the order flow. I call it the tip of the spear. So the profile is really in a higher time frame. You know, it's a developing daily time frame. Then these are micro auctions. They're the same thing. This is why, by the way, you notice why I'd be out of the short? Does this make sense? This is how I manage the trade. And then, by the way, it can take this out. It can go to zero. But my trade, I just, you know, these are not, remember, I always say horseshoes and hand grenades. This is a key area. And remember the word, location, 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 not the Rock of Gibraltar. What showed me the possibility? Absorption here, then the sellers hit it hard. Why are we going up from here? Absorption. What is that? Absorption. Where were my sellers? Here. And they got taken over right here. So that's why it's an exit for me. Right there. Out. That's it. Done. Now, Barca Lounger. Further questions? And G. Campbell, the question is a good one. I think the proper answer for you is they're locations. They're not mechanical. And this is hard for traders, I think, because to understand that this is what's called contextual, it is not mechanical. In the Trader Lab, we know this is a target, and we know the IB continuation trade is a structured trade, but it's not mechanical. It is, where's the trigger? So when we broke, I'm trying to remember where it is. Don't remember now. Might have been here, right? I don't remember if this was it or not. But I'm looking, if I have buyers and the sellers take control and the buyers are here, just giving you an example, and they fail, there's resistance and I break. If I come back here, it's an LVN. This is a short also. If you trade this time frame or fractal, if I come down here and I notice what's up here, by the way, let's just look at this. The opposite. Resistance. I see sellers here. Buyers are above, but I see my seller. Buyers are above, and where am I? Out here. What's this? Low volume, outside edge. I break away. It's a short. Or nothing. If I can't trade this, I don't trade it. Maybe my short's up here. I mean, it doesn't matter. The thing about trading is not to try to catch all these wiggles. It's to know in advance where behavior might happen. That's kind of how I think of it. I say, well, where might something happen? That's what this is. Where might something happen? Well, over here. What am I going to do? I'm going to watch it real close down here. What do I see? Heavy selling. Why does the market go? Why does not the market go down when you have selling? Because you have absorption and you have icebergs and you got whatever else is here in the kitchen sink. So as soon as I see a reversal, I get out of the trade and I don't worry about it. There's no precision in trading. There's just maybe, and but that's it. That's all you got. Maybe. So for me, flat, nothing to do. Unless, now where's my next trades? Well, this is my primary target. So for me, well, there's possibilities here. This is definitely not a trade recommendation. Let me give you some ideas. If this is too low, where might we come back? Here. Not along. Now, I have to tell you, I know, and remember, I don't know what will happen. I know what might happen because I understand market mechanics. I understand if these guys are absorbed, maybe this might be the low of the day or not. I know this was a key location in my higher time frame. And if it's too low, right, I know, there's our 32. I know I can come back. Remember, this is a price check. Low volume node here. Remember, primary target coming down. Get below here, next target here. This is not complicated. It's just random. If this becomes too low, what might I do? Come back to the low volume node. If I clear the low volume node, I come back here. Same as what I'm showing you in the lower time frame. Does that make sense? And there's more on the intraday developing time frame. This is how auction market theory works. So if this is too low, this might be too high. If I come through here, I got stops at the mid in the VWAP, and if I squeeze through here, I got 60, our good friend, and maybe even back here. And I don't know. Doesn't matter. You see. So but the trend is down. So if you got involved in here, it's a counter trend trade. I can tell you my preference. I just like to trade with the advancing army. I don't care. Now, and my day is already quite nice. So, because this might only be a squeeze and we might get continuation selling. Where's my low volume outside edge? Let's watch it together. Further questions, guys, post them. Remember, we have a special Discord only institutional trader streams going on. You're all invited to that. You don't have to be a Bookmap subscriber. There's no cost. I'm going to just flash it up here. And there's a contest where you could win free Bookmap for a year, the Global Plus, and the $1,000 cash prize and more. But you got this. This is only October 21st and 25th. So we've got These are 9 a.m. Central. You got Scott Pulcini and you got Al V. Al V is a friend of mine, and you'd like to hear this one when you hear about him. We're talking quant, over $1 billion under management, that kind of thing. I think that'll kind of twist your mind. If Al wasn't doing this, they'd have him working at NASA, definitely. So, and we do collaborate, and great guy. Now, if you can't watch these because you are trading, definitely record them. They are not going to be in YouTube. If you guys in YouTube are interested in learning how institutional traders trade size, this is a must. This is a must. Now, the other part is we have a contest. It starts October 29th. You still have time. You do need to register for it. And the way you do that is you go to the Bookmap Discord Trader Lab community. You'll then have access to this, or go to bookmap.com and you'll see this. You need to register. There's no cost. It's 100% free. You need to install and activate the Bookmap for desktop. It's the free desktop version of Bookmap. You get your hands on it, and then you're going to trade a $1 million account in Sim. You like the scalp? Do you think you could be numero uno? One way to find out. Give it a shot. Questions? Well, G. Campbell, the thing about structured trading is it's trade plan specific. Everything you see me do in the stream, or anyone else who's in Trader Lab, who has a trade plan, it's all be done before. It's all done. The plan is done. It's what happens at locations. So where's our low volume node? What creates a low volume node? When the market breaks away from a consolidation, which is this, it leaves a gap, okay, of low volume because of urgency. These buyers, they got thrown under the bus. Thanks for playing. So now we're below them. Resistance is that high volume. This is now the low volume node, outside edge. The swings here. So stops are there and stops are here. If I come up here and I see I got resistance here, and I know sellers took control here, I'm going to be observing it. This is not a trade recommendation. In the auction, we know what creates it. We know what might happen. We don't know what will happen. So for me, if I'm sitting in here, I know the buyers were absorbed by the sellers. So the sellers are here. I know the buyers took a shot here and they got handed their lunch. I know, let's look at what I know. I know this is the outside edge of my distribution, but let's not forget what else I know. This was my target. So I know I got my target, and this is like a direct hit. Doesn't mean we won't come back here. And I know resistance is here. That's as much as I know. Now, when I come up here, I'm going to be looking at it. And it might only be a rotational trade out to here. But let's just observe it. I'm not calling a trade. This is not necessarily a trade I would take, because I'm already, this was my primary target. I might just do lunch and take a nap. Or right here is where the sellers were in control. The sellers were in control, and the buyers got thrown under the bus. And there's my outside edge. Let's observe it together. This is not, remember, this is not a trade calling room. Don't take my stops. I take them just the way the cookie crumbles. I'm going to look at my high volume, which you see where it is. It's right there. So I know based on this structure, and the sellers were here and the buyers failed here, this is resistance. And there's location. This is like real estate. Let's just see what happens. Not a trade recommendation. Our job here is to observe the behavior and learn market mechanics. This is an aggressive trade. So it's not one I would necessarily take, but I'm always going to be watching and narrating. Why is it aggressive? Because, let me bring you back to why. Primary target. So I know this might be too low, and we can now squeeze out these shorts. So it's easy So I look at this as a over under, for this distribution. It's right there. So if I come up here and get, other than test it and reject off, then I'm looking, to come back towards this. If I get through here, then the squeeze is on. So the choices are the following. This is just to keep you on your edge. If this is too low, it's a long. If you're going to trade back. If this is too high, it's a short for a rotation. The conundrum is this the low of the day? And we won't know until hindsight naturally. So I know this is outside, and we can rotate from here somewhere, maybe down here, test the low, maybe take it out. Don't know. Maybe take it out by the end of the day. Maybe this is a low of the day. Isn't it true? So where's my last reference point? It's this. Let me draw a little box around this for you. Excuse all the white lines. I'm trying to help you see this. Low volume node is here. This is a consolidation. That's what the box is for. Resistance is here. Bottom of the breakout, LVN. High volume node there. Is everybody kind of seeing the structure here? Low volume node also is here in the microstructure. And then up here, you see. Questions, guys. Is this making some sense? The triggers are retracements to high volume. They are fractals of what we're doing in higher volume locations. Like, for example, this is high volume. It was tested in the ETH, it was too high. When I get a trigger, it's the same thing. So the volume, for example, in here, if this is too low, then I break above it, it becomes support. It's right there, you see. So it's the same thing. So if I get above this, this is resistance. So I'm looking in this area because it's an outside edge. And what happens here is either we're going to test, and this is my resistance, so outside edge, resistance, and rotate, or if I push through it, then I have nothing to do. I just sit back in my Barca lounger, and I have no trade. So this is why this is important. And remember why it's important. Buyers failed here and the sellers took control. So one of the ways to think about, and the buyers took control down here. See, so I got my sellers here and I got my buyers here. So what's what? Too low? Where's too high? That's what we're trying to do. The auction is really a shopping experience. Guys, if you know how to shop, then if you can extrapolate what shopping is, that's what the auction is. The purpose of the market is to try to figure out what's too high, what's too low. And it does it all day long in these rotations. So we can have a higher time frame plan, but we've got to get into the shorter time frame in order, and that's why 32, right? 60 support, micro composite low volume node, same process I'm showing you in the developing daily time frame. Support 32. So 32 resistance, get through there, maybe back here, and who knows, So now we're looking at the same process in a developing time frame. So all I'm doing is trading in fractals. Remember the micro composite low volume node, which is what I just showed you, which was our first target, second target. This is the same thing in this time frame. So this in the intermediate time frame, this in the developing time frame, low volume node. You see how this all fits together? And then in the microstructures, these little high volume things are the same as that. I hope that makes sense to everybody. Notice we're coming through. So for me, I just in park. And if I come through here, then it just takes me, I got nothing to do. So I want to see this because this is where the buyers got run over and the sellers took control. So here's how I think of this also. It's just a thought process. If the sellers took control here, and I can see that, are they going to use this rotation to sell it here? And there's my outside edge. Let's just look at it together. Not a trade recommendation. But what I do here is I'm on my outside edge. My high volume is there. So that's my resistance. So this would be a consideration to interact. It's not a recommendation. Let's see it. Now, what's important to know is I anticipate this. I don't know anything else. If I get involved here, my goal is to get risk neutral, right? Can you see this? And where's my high volume here? It's here at 40. So if this is my short, I'm looking to here, actually, this. So this is a structured trade, maybe if it's vetted in your trade plan. Are you guys tracking? Now, I don't call trades, but I'd like you to observe. FERS, it hasn't changed yet. But I do think that 32 is very important. I mean, subject to a trade plan, you could be gotten long down there, but this would be where you would be going. It's it's really a counter trend long. Or you're not taking longs because the context is down and you're just taking continuation shorts. This is all subject to trade plan. So to me, the context is still down, and let me give you the but, this might be the low of day. So I just would take this trade. And if I wasn't streaming, I see what I hope you guys are appreciating out of this is trade plan is anticipated. It's not predicting. I look for behavior in an area. And I also have to look what happened here, wherever it was, here, there. Because this is my resistance. My sellers were here. And where did my sellers take over? Here. Where did we come? Now, no precision in trading. So I have this in a developing time frame, and I have microstructure right there. You see it? This is how I put things together because I'm trading rotations in my time frame, but they're all piggybacked on top of higher time frame. Think Russian dolls. That's kind of the way I think of this. Before I thought up Russian dolls, so we could visualize the higher time frame, and they're all inside each other. They are fractal. I thought of it as a vertical chess game. I mean, basically, they're stacked on top of each other, and different time frames make different moves, but they're all in alignment. But the Matryoshka dolls, and I recommend everybody in Trader Lab get a Matryoshka doll, put it on your desk so you don't get myopic. The point of this is, this was a potential long, which I wouldn't take back to here. Or if the trend is down, a potential short scale and here. Or trade management, and it's just a trade. Do you think if you're visiting in YouTube that understanding market mechanics, having a trade plan that has a statistical edge might differentiate your results from most other retail traders? And we all get winning trades. I coined a phrase called Trader Groundhog Day because I had winning trades, of course. And I tried to make them better. So I go back and curve fit them, basically, tweak, tune, like we used to do with the old carburetors back in the Stone Age before fuel injection. You'd actually use a screwdriver to get it to run better. Well, we do the same thing in trading. We're always going back and trying to make it better. Now, that's okay. The problem with it is that doesn't work in trading because you're always adjusting or tweaking or curve fitting for previous behavior. This behavior today is not yesterday, right? And then what I did, I said, I really can't do this tweaking and tuning and curve fitting. I build a trading system, and I work with Ralph and Bill Cruz out of Miami. They created something you might have heard of called TradeStation. I worked with them on the beta part of that before it was a real-time product. So I used that because I was an end of day. I was a swing trader and a trend follower. There was no real day trading. The quote, day traders were my buddies down on the floor. Notice where we are. So if you took this short, you'd have to get risk neutral, and then it's trade management. This trade could be done here, right? Does it matter? What's your time frame? You see? So, and let's come back to one other little piece. Where's my buyers? Here. You see? Could you be trading this to this micro high volume structure? Let's put a little line on it. See what I mean? If this is support, my volume is there. Then you got this and you got this. So the buyers took over here. The sellers were absorbed here. We can come back and test or not. I'd be out of this here. I don't care about it. Do you care? I'll just take this, put it in the hopper, and be out. It doesn't matter to me. This is still possible. And if we fall out, we could go, wherever. This is a trade, but it's advanced. But can you learn this? I believe anybody can learn to trade if they do the work. Whether they'll be able to is subject to a lot of factors. Discipline, doing the work, managing emotional states. The key, in my opinion, to getting over the emotional problems we have, and it's triggered by uncertainty. We're wired to stay away from uncertainty and to seek certainty. That's our thing. Remember, saber-toothed tiger, is there one behind the tree? I'm not going there. See you later. Fear, survival. It's wiring. So in this business, what we're doing is we're trying to push back against primal wiring that is under the surface of our consciousness. That developed before intellect and consciousness. And let's just assume maybe that's the way we evolved or developed. It's always there. That's the voice in your head. I better wait for confirmation. What is that? There might be a tiger there. What else is it? You see what I mean? In Trader Lab, the way you can overcome that, or at least have a better opportunity, not everybody does, because it's a very, very strong force, is statistics. Remember I talk about trade plans, vetted trade plans, statistical probabilities. Where does this come from? Casinos. How do they do it? Statistical probabilities. Can they predict the outcome of the next trade? No. Do they make them up? No. If they pay somebody $100,000 while playing blackjack and that gambler walks out, do they now make the cards 10 cards? No. Do they skip the next hand? No. Do they change how they manage the next trade? No. If you're doing that, that is typical retail trader behavior. And the failure rate for retail traders, as you guys know, and you have to vet this, of course, like everything else, is over 90%. If you're doing what they do, I would suspect, and of course your mileage may vary, that statistically it's not realistic to expect a different outcome. The Trader Lab is about building out the business of trading and potentially creating longevity in a career path. If you're interested in that, click the link in the bottom of YouTube, visit the Trader Lab. There's no cost. And currently there is no cost. I can't say it'll always stay that way. Also, there's 60 PDFs of these structured trades I'm showing you here, and a library of webinars, and of course the Trader Lab community, which to me is the best community in this business. It's not romper room, and it's not a trade calling room. It's to help you become independent, go through the learning curve, and maybe create a different outcome. And don't forget, we have special institutional webinars available only in Discord. Register for them. You don't want to miss Friday with Al V, managed over $1 billion. You might want to get some ideas from him. Also, we have our scary trade $1 million in sim, starts October 29th. You can register at bookmap.com. You would get to install and activate Bookmap for desktop. It's free. There's no cost, nada. And you can win a year of Global Plus Bookmap, a year of the MBO Stop an Iceberg package, and $1,000. You might want to think about that one. Please give a thumb up in YouTube. Give a like. It helps folks find the stream. Come to Trader Lab. Take advantage of all the resources, the 60 PDFs of these structured trades in the library of webinar, and of course, the awesome Trader Lab community. Thanks, guys. Thanks for visiting Trader Lab. I'll see you in the Trader Lab. Thanks. See you soon.